Hello students, how are you all? I hope you are doing well. In this video, we are going to discuss CA Foundation Accounting January 2025 RTP. First of all, let us try to understand what is the purpose of the RTP. So, if you observe, the RTP contains one question from almost each chapter. One question from each chapter. You can able to solve this question. That means you have prepared well or reasonably your preparation is good to solve the questions. Yes or no, students? After RTP, next level you can test your knowledge by solving MTP, mock test paper. After that, you can go to exams. Yes or no, students? Yes. Now, without wasting much time, we try to solve this RTP questions, students. Now, observe the first question: true or false statements. First question: true or false statements. As you know very well, we get 6 true or false statements in the final exams. 6 into 2 marks, 12 marks. That is the importance we have for true or false statements. Now, first one: state with reasons whether the following statements are true or false. Okay, first one: the debit notes issued or used to prepare sales returns book. See, generally, whenever a customer returns goods, customer will send debit note. After receipt of goods and a debit note, the buyer, that means the supplier, will send credit note to the customer. Both notes will contain same information. Now, for a supplier or creditor, sales returns, he maintains sales returns book by using credit note. By using credit note, debit note is used by the customer, credit note is used by the supplier. So, if you think your supplier, we use credit note to record or to prepare the sales returns book. Yes or no, students? Look at the first one. The answer is false. Debit note issued or used to prepare purchase returns book. Yes or no, students? Next one. Second one. Sale of office furniture. Normally, what is the entry we record for sale of office furniture? Cash or bank account or data account debit to furniture account. Yes or no? Should be credited to profit and loss account. No. Generally, profit or loss on sale of furniture is transferred to the profit and loss account. But here they said sale of office furniture is credited to the profit and loss account. No, sale of office furniture is credited to the furniture account. Yes or no, students? Yes. Get second one false. Next one. Outstanding salaries for the previous year. Outstanding salaries for the previous year shall be shown as liability in the current year balance sheet. Actually, outstanding salary liability is shown on the liability side of the previous year balance sheet. That becomes opening balance for the current year. That means that is shown opening balance sheet for the current year. But current year balance sheet we didn't show this because it is previous year item. Yes, almost last year whatever outstandings we have, we may pay all these outstandings in the current year. That's why again this is not shown in the current year balance sheet. So the given statement is false. It shall be disclosed as a current liability in the opening balance sheet, not closing balance sheet. Next one, fourth one. When closing inventory is overstated. Normally, when the closing inventory is overstated, automatically our gross profit gets increases. Yes or no, students? Net income also increases. Net income for the accounting period will be understated. So the given statement is false. If closing inventory is overstated, automatically gross profit overstated. At the same time, net profit also overstated. So the given statement is false. Observe carefully. Fourth one. Next one. The result and the position disclosed. Result means whether profit or loss. Position means financial position. Disclosed by final accounts are not exact. Yes, because we follow different concepts, conventions, principles while preparation of accounting standards, also while preparation of these financial statements. So entity to entity, we follow different concepts. So the result and position disclosed by final accounts are not exact. True. Go and look at true. They are prepared on the basis of assumptions, conventions, concepts, and personal judgments of the personal person who prepare them. That's why these are different. Next one. In case of a public holiday means this is the concept of bills of exchange. So, in case of a public holiday, the due date of the bill, normally the due date of the bill falls preceding the public holiday, preceding the public holiday. In case of emergency holiday, then the bill falls on succeeding holiday. So, the due date of the bill falls on the next working day. No, it is false, na? False. In case of a public holiday, the due date of the bill falls on the preceding working day. Next one. Goodwill is intangible asset. Yes. Therefore, it cannot be valued. No. Even though goodwill is intangible asset, it can be valued. So the given statement is false. Seventh one. Yes or no, students? Next one. Where a non-profit organization is a separate trading entity. Separate trading entity. Normally, what we do, we prepare a separate trading account, and the profit or loss on trading activity is transferred to the income and expenditure account. This will happen normally. The profit or loss from the trading account shall be transferred to the income and expenditure account at the time of consolidation. Yes, is true. Look at next one. The firm will receive surrender value. The firm will receive surrender value of the joint life policy on the death of the partner. Normally, on the death of the partner, the firm will receive full value of the policy. When the policy is surrendered at the time of retirement of a partner, then the firm will receive surrender value. So the given statement is false. Yes or no, students? Next one. 10th one. Company X Limited is incurring huge losses. Okay. The board of directors are of the opinion that in case of losses, there is no need to pay interest on debentures holder interest to debenture holders. This is false. Even irrespective of the profit levels of the company has to pay interest to the debenture holders, and it is charged against profit. Yes or no? So the given statement is false. Observe carefully. Next one. Next theoretical framework, they have given two questions. You people try to read these two questions. Now we jump into the problems. First problem is journal entries. The first problem is on the concept of journal entries. Look at carefully. Pass a journal entry in each of the following cases. So pass journal entry in each of the following cases. Fine. Look at first one. A running business was purchased by Mohan with following assets and liabilities. Whenever we purchase a running business, then how the entry is recorded? All assets are debit and all liabilities are credit. Difference is nothing but capital. That is credited now. Look at cash asset debit, cash account debit, land asset debit, furniture debit, stock debit, creditor liability credit, bank overdraft liability credit. So what is the entry we can write? Cash account debit 20,000, land account debit 40,000, furniture account debit 10,000, stock account debit 20,000, creditor liability credit 10,000, bank overdraft liability credit 20,000. And the difference is nothing but capital. So look at the entry here. Here to save our time, I am showing the answer directly, students. Okay, look at cash account debit, land account debit, furniture, stock, creditor, bank overdraft. Difference is nothing but 60,000. That 60,000 is treated as capital. Is it clear, students? Next one. Sold goods to Gagandeep for 1 lakh. Normally, what is the entry we record? Gagandeep account debit to sales 1 lakh at a trade discount of 20%. Now, how the entry will become? Same. Gagandeep account debit to sales. Trade discount is deducted 1 lakh minus 20%. 80,000 is our sale value. And charged IGST 12%. So apart from 80,000 rupees sale value, we are also charging 12% IGST. That means how the entry becomes. Now look at 80,000 plus 12%. First 1 lakh is the sale value. 1 lakh is the sale value minus 20%, we get 80,000. Plus, we are charging 12% GST. 12% on 80,000 is nothing but 9,600. So, total amount we collect from Gagandeep 89,600. Out of that, whatever the IGST we are collecting, that is payable to the government. So, it becomes liability. Now, how the entry will become? Gagandeep account debit, total amount receivable from Gagandeep 89,600 to sales. What is the sale value? 80,000 only. To output IGST 12% 9,600. The entry we record. You get? Yes. Gagandeep account debit 89,600 to sales 80,000 to output GST. That means IGST or GST account 12% 9,600. Is it clear, students? Next one. Goods distributed by way of free samples 10,000. What is the entry we record? Advertisement account debit or free samples account debit to purchases account 10,000. Yes or no? Is the entry look at? That's it. Next one. Goods of list price 40,000 returned by Gagandeep. Goods of list price 40,000 returned by Gagandeep. Normally, what is the entry for this? These are sales returns. So, we record the entry sales returns account debit to Gagandeep account 40,000. Actually, list price 40,000 minus 20%. Earlier, how much trade discount we have given? 20%. So, 40,000 minus 20%, 8,000 rupees. So, we record the entry for 32,000. Okay, sales returns account debit to Gagandeep account 32,000. But if you observe, earlier we have charged GST from him. Now, this 32,000 rupees is returns, sales returns. So, it is not our sales. Now, we reverse. We reverse the output GST account. We reverse the output GST account because on sales you have to pay GST to the government. Now, it is not sales now. So, you need not to pay any GST to the government. That's why GST account is reversed. So, look at how we record the entry. Sales returns account debit 32,000, output GST. So 30 IGST 32,000. Here also write down output IGST 32,000 into earlier we charged 12%. Earlier we charged 12%, 3,840 rupees. Yes or no, students? Yes. To Gagandeep account total 35,000. Now look at next. Kuldeep became an insolvent and could pay only 50 paise in a rupee. Amount due from him 6,000. Total amount receivable 6,000. Out of that only we are receiving 50 paisa. So 3,000 rupees we receive. Cash or bank account debit 3,000 rupees. Remaining amount bad debt becomes because he became insolvent. So bad debts account debit 3,000 to Kuldeep account 6,000. So that is the entry we record. Look at cash account debit, bad debts account debit to Kuldeep account 6,000. Is it clear, students? Yes. So this is the concept of journal entries. Now look at next concept, capital or revenue expenditure. Compulsorily, you get at least one true or false statement on this concept, capital or revenue expenditure. Or sometimes you get 4 marks theory question from this chapter, capital or revenue expenditure. Maybe. Okay. Now look at first one. Classify the following expenditures as capital or revenue expenditure or receipt. So here expenditure two types, revenue, capital or revenue. Receipt also two types, capital or revenue. So how can we classify whether it is revenue expenditure or capital expenditure? Suppose out of the expenditure, if you get benefit within 12 months or one accounting year, then that expenditure is treated as revenue expenditure. If out of the expenditure, if you get benefit for more than 12 months or one accounting year, then that expenditure is categorized into capital expenditure. And the expired portion of the capital expenditure is transferred to the profit and loss account every year. And revenue receipt means, so if any receipt is received by the business frequently, normally sales or a discount or interest, this is treated as revenue receipt. And whatever the amount we receive normally, occasionally, not frequently, then that is treated as capital receipt. Normally, for example, sale of asset. Sale of asset. See, generally we don't sell any asset. Yes or no? So whenever you sell any asset due to any condition, then that amount is treated as capital receipt. Is it clear, students? In the previous example, previous true or false statements, if you can observe, sale of office furniture. Second one, look at sale of office furniture. Sale of office furniture. Yes, by selling office furniture, we received amount. So that amount is nothing but capital receipt. Is not revenue receipt. Is it clear, students? Next one. Now look at the first one. An extension of railway track in the factory area. Extension of railway track in the factory area. So we have incurred some expenditure on extension of railway track. So first of all, check whether because of this expense, will you get any future benefits or not? Yes. So we get a future benefits of extending the railway track, students. So that's why this expenditure is treated as expenditure. Observe carefully. Expenses incurred for extension of railway tracks in the factory area should be treated as capital expenditure because it yields benefit for more than one accounting period. Next one. Amount spent on painting the factory. See, because of this expenditure, we don't get any benefit. Long benefit we don't get. That's why we treat it as revenue expenditure. So students, so painting of the factory is treated as revenue. Next one. Payment of wages for building a new office. See, we are building or constructing new office extension and we paid wages for that. So these wages are treated as capital expenditure. So payment of wages for building is treated as capital expenditure. Next one. Premium received on issue of shares. We received premium on issue of shares. So securities premium, this amount we transfer to the securities premium account and this amount we will not receive frequently. So it is treated as capital receipt. It is treated as capital receipt. Look at students. Payment received on issue of shares is an example of capital receipt. Next one. Rings and pistons of an engine were changed to get full efficiency. Full efficiency. So because of this, we don't get any future benefits. That's why we treat it as revenue expenditure. Suppose if you change any part of the engine which gives fuel efficiency, not full efficiency, fuel efficiency, then that can be treated as capital expenditure. But it is just to get the full efficiency, we have changed the rings and pistons because this part is worn out and every time we have to change. That's why it is treated as revenue expenditure. Next one, legal fees paid to acquire a property. Generally, at the time of purchase of property, we have to register that property on our name. So whatever the legal charges or stamp duty or whatever the amounts we have paid to the government, so all these are treated as capital expenditure. All these are treated as capital expenditure. Get students? So legal fee paid to acquire a property, part of cost of the property, and it is treated as capital expenditure. Next one. Look at the next question. Subsidiary books. Our next concept is on subsidiary books. Look at prepare sales book. They are asking to prepare sales book. Which transact first of all, which let me know which transactions are recorded in sales book. Only credit sale of goods. Only credit sale of goods. Cash sales of goods not recorded in the sales book, and sale of any other assets also not recorded into this book. Yes or no, students? So keep this thing in your mind and follow. Sales book of Mrs. Alpha of Kanpur for March 2024. So here they have given total 4 transactions. Here they have given total 4 transactions. Students, observe carefully. First one, March 5th. Sold to Messrs. ABC 10 pieces of chairs, 5,000 each, less trade discount to 5%. So first, how many pieces we have sold? 10. 10 into 5,000 is 50,000. 50,000 minus 5%. 50,000 minus 5%, 1,250 deduct, and remaining amount is shown on the outer column. Look at 2,500, 50,000 into 5%, 2,500. So first we'll draw the format like this. Sales book of Mrs. Alpha for March 2024. So date, particulars, gross amount, trade discount, net amount. Or sometimes you may draw simply gross amount column, details column, and the trade discount we deduct in the details column itself, and the outer column we transfer the net amount. Look at first one, March 5th. So simply here we write the name of customer, Messrs. ABC, and we also write the goods which we have purchased, description of the goods which we have purchased. 10 pieces of chairs at 5,000 each, less trade discount 5%. What is the gross amount? 50,000. Trade discount 5,000, 5% on 50,000, 2,500. Remaining amount 47,500. The net amount payable to, sorry, net amount receivable from ABC. Next one, March 12th. Sold to Messrs. PQR 25 pieces of tables. Table is also furniture if you observe. There's furniture. Okay, that means his business is, their business is furniture business. Their business is furniture business. 25 pieces of tables, 2,000 each. Total amount 25 into 2,000, 50,000 rupees each, less trade discount 10%. So 50,000 minus 10%, 5,000 rupees trade discount. Outer column 45,000. So carefully. So March 12th, Messrs. PQR 25 pieces of tables at 2,000 each. So total gross amount 50,000, count 5,000, remaining amount 45,000. Next one, March 18th. Sold to Messrs. MTB 5 pieces of recliner chairs. It is also part of furniture at 11,000 each, less trade discount 10%. Payment received through cash. So immediately after sale of these recliner chairs, we received cash. You tell me, is it credit transaction or cash transaction? It is cash transaction. So cash transactions are not entered into the sales book. Yes or no, students? So this transaction is ignored from sales book, but this transaction is recorded in cash book. This transaction is recorded in cash book. Next one, March 28th. Sold to Messrs. LMS 50 pieces of cupboards. Cupboards also part of furniture at a 10,000 each, less trade discount 20%. Now 50 pieces into 10,000 each, 5 lakhs minus 20%, 1 lakh. So outer column we write 4 lakhs rupees. Look at 28th date. Messrs. LMS 50 pieces of cupboards at 10,000 is less trade discount 20%. Gross amount is how much? 5 lakhs. Discount, trade discount 1 lakh. Outer column 4 lakhs. Now look at the total amount, 4 lakhs plus 45,000 plus 47,500. Total 49,000. 4 lakh 92,500. Now here we have to write a note point that transaction dated on 18th March not recorded into this book. Why? Because it is cash sales. Yes or no, students? So this is our subsidiary book problem. So sometimes they may ask a problem from subsidiary books or cash book, because cash book is also part of subsidiary book. Yes or no, students? Either they may ask purchase book or sales book, or sometimes cash book. Next one, rectification of errors. Yes, this is important. This is important. Look at, students. Mr. Satvik was unable to agree the trial balance last year. Trial balance last year means is it stage 1 or stage 2 or stage 3? Stage 1 nothing but before preparation of trial balance. Before preparation of trial balance. Stage 2 nothing but after preparation of trial balance but before preparation of final accounts. Stage 3 nothing but after preparation of final accounts. That means we are identifying and we have located and rectifying the errors in the next financial year. Yes or no, students? Now look at, so this is under stage 3. When you are solving, when you are rectifying errors in stage 3, all the nominal accounts, in the place of nominal accounts we use the account profit and loss suspense account. Profit and loss suspense account. Yes or no, students? So this is the care you have to take. And wrote off the difference to the profit and loss account. Observe carefully. Last year we have a difference in trial balance. Generally, the difference in trial balance is transferred to the suspense account. But here what happened? The difference in trial balance is transferred to profit and loss account. The difference in trial balance is transferred to profit and loss account. That means in the next financial year, if you open suspense account to record the entry, you don't find any opening balance in the suspense account. This is the care you have to take of that year. Next year, he appointed a chartered accountant who examined the old books and found the following mistakes. Now look at one by one mistake. First, visualize what is the how you rectify these errors under two. Stage 2. After that, you convert it into stage 3. In stage 2, if you find nominal accounts, we use nominal accounts. But in stage 3, if you find a nominal accounts, in that place we use profit and loss suspense account. Yes or no, students? Look at purchase of a scooter was debited to conveyance account. How do you rectify this normally? Now we debit scooter account or motor vehicle account, we credit a conveyance account. So scooter account debit to conveyance account. This is how we write. How much? 30,000. If you rectify this in the previous year, we write this entry. Scooter account debit to conveyance account 30,000. Mr. Ratan charges 10% depreciation on scooter. So suppose if you have rectified this error in the previous year, then we also charge the depreciation. For that, what is the entry we record? Depreciation account debit to scooter account. So scooter account debited 30,000 and credited 3,000 rupees. Credited 3,000 rupees for depreciation. So finally, scooter account shows 27,000 rupees in our books of accounts for the next year. Now, when you are rectifying the same in the next financial year, we bring the scooter at 27,000 rupees, not at 30,000. Because if you debit 30,000 rupees, again you have to charge 3,000 rupees depreciation in the last year. So that what we do, we debit directly 27,000 rupees scooter account to conveyance account 27. But in the place of conveyance, we use profit and loss adjustment account. Okay, students. So scooter account debit to profit and loss adjustment account 27. Next one. The total of return inward book. Return inward book means sales returns book. For July 2024, 12,400 was not posted to the ledger. So sales returns book totaled 12,400. We forgot to post into the sales returns account debit side. What about other postings? Yes. From whom goods received, we posted onto their account. Yes or no? Now sales returns account debited. Normally, how do you rectify this? Sales returns account debit to suspense account. But here we are rectifying the errors in the next year. So we debit a P&L adjustment account. Finally, what is the entry we record? P&L adjustment account debit to suspense account 12,400. Is it clear? You may ask, the suspense account is not created earlier, na? Yes. But to complete the rectification entry, we are using suspense account here. That's it. Next one. A credit purchase of goods from Mr. X for 20,000 was entered as sale. We have purchased goods from X, but it is entered as sales. Now, how do you rectify normally? Simple. Purchase account must be debited. So, purchase account debit. A minute. How do you rectify normally? Tell me. Purchase account debit. Sales account by mistake credited. Na? So, sales account debit to from whom we purchased? From X we have purchased. So, to X account. Purchase account 20,000. Sales account 20,000 and X account 40,000. This is how we rectify the error. But here if you observe purchase and sales both are nominal accounts. This place we use the account profit and loss suspense account debit to X account. Is it clear, students? Look at profit and loss adjustment account debit to X account 40,000. Next one. Receipt of cash from Mr. Pritish was posted to the account of Mr. Ravish 10,000. Normally, what is the entry for receipt of cash? Cash account debit to Pritish account. So, Pritish account must be credited. But by mistake, we credited Ravish account. How do you rectify this? Now, Ravish account debit, Pritish account credit. So, Ravish account debit to Pritish account 10,000. I hope you are following, students. Next one. Receipt of cash from Mr. Chandu. Normal, what is the entry we record? Cash account debit to Chandu account was posted to the debit of his account. Actually, we have to write credit side of his account 5,000. Credit side of his account 5,000, but by mistake we have written on the debit side. Now, how do you rectify? By crediting Chandu account by 10,000 rupees. So what is the entry we record? Suspense account debit to Chandu account 10,000 rupees. Observe carefully. Is it clear, students? Next one. While carrying forward the total in purchase account, while carrying forward the total of purchases account to the next page, 55,950 was written instead of 65,950. Actually, purchase account one page total. We have to write how much? 55,950 is the correct amount you have to write. But by mistake, how much amount you have written? 55,950. So you have written 10,000 short. Now what we do? We simply debit purchase account with 10,000 rupees. Is it or not? Yes. Normally, how this entry gets rectified? Purchase account debit to suspense account. By debiting purchases account and creating suspense account, we write the rectification entry. But here purchase account is nominal account. So in that place, use profit and loss adjustment account. But by mistake here, they have debited purchase account in the place of purchase account. Actually, this entry is not correct. So what is the entry we record? Profit and loss adjustment account debit to suspense account. To suspense account. Is it clear, students? Yes. Next one. Sale of goods to Mr. Rohan for 20,000 was omitted to be recorded. Sale of goods to Mr. Rohan for 20,000 rupees was omitted to be recorded. How you record? Normally, what is the entry we record? Mr. Rohan account debit to sales account. But in that sales account place, we write Rohan account debit to profit and loss adjustment account. Is it clear, students? Next one. Freight paid on a machine 5,600 was posted to the freight account as 6,500. Generally, freight paid on a machine is must be debited to machine account 5,600, but it is wrongly debited to freight account 6,500 first. Cancel freight account with the 6,500 first. Yes. Now debit machine account with 5,600. So how this gets rectified? Machine account debit 5,600 to freight account 6,500. There is a difference of 900 rupees. We write suspense account. But here freight is nominal account. In this place we use now profit and loss adjustment account. So finally, how do you rectify this? Machine account debit 5,600, suspense account debit 900 to freight account 6,500. These two P&L suspense account adjustment account 6,500. Look at students. Machinery account debit, suspense account debit to profit and loss adjustment. Now, after completion of all rectification entries, try to prepare P&L adjustment account, students. Try to prepare P&L adjustment account. P&L adjustment account. Look at the first entry. Yes, first one P&L adjustment account, credit 27,000. So here I am preparing profit and loss adjustment account. So it is suggested to prepare you people also profit and loss adjustment account in the exam. So profit and loss adjustment account, here credit 27,000. Next here debit 12,400. Next here also debit 40,000. Next, entry, no entry. Yes, P&L adjustment to suspense, debit 10,000. Next, credit 20,000, credit 20,000. Next one, credit side 6,500, 1,500. Next one, debit 11,100, 11,100. Next one, that's it. Yeah, that's it. Look at, sorry, this 11,100 not posted. No? Finally, we have to post. That's it. Now look at, so this after posting all the rectification entries into this P&L adjustment account, it shows like this. Now balance this 27,000 plus 20,000 plus 6,500, total 53,500. Okay, debit side 12,400 plus 40,000 plus 10,000, 1,400. Observe just a minute. Yeah, here they have committed one mistake. No, 10,000 they have credited. Okay, so what is the difference we get? Difference is 52,400 minus 53,500, 8,900 rupees. 8,900 debit balance more or credit balance more? So P&L adjustment account debit to, sorry, debit side is more now. So capital account debit to P&L adjustment account. So 8,900. 8,900. So carefully. So 8,900 rupees debit balance now. So how we record the entry? Observe this. This entry must be reversed. This entry must be reversed with 8,900. 8,900 students. Observe carefully. Because P&L adjustment account is showing debit balance more now. So now we credit. This is transferred to capital account. So what is the entry we record? Capital account debit. Satvik capital account debit to profit and loss adjustment account 8,900. Make a small correction. Next, we also prepare suspense account students. So here actually bifurcation I have to write, but I have written total amount. Don't worry. Okay. Now look at suspense account. So it is suggestible to prepare profit and loss adjustment account at the same time suspense account also students. Look at. So from the beginning, observe. So first entry, no suspense account. Second entry, yes, we have suspense account. Suspense account is credited on the credit side 12,400. Next one, yeah, suspense account debit 10,000. Next one, yes, here also suspense account credit 10,000. Next one, eighth entry, we have suspense account debit 900. Suspense account debit 900. Next one, that's it. Okay, now balance suspense account. Credit side 22,400 minus 10,900. 22,400 minus 10,900. Difference is 11,500 students. Here suspense account is showing credit balance. If you observe at the beginning of the problem itself, they said previous year whatever the suspense account balance we have, that is transferred to the profit and loss account, and don't consider this 11,500 as opening balance. Don't consider this 11,500 as opening balance students. Is it clear? So now this difference of 11,000 also transferred to the Satvik capital account. What is the entry we record? Suspense account is showing credit balance now. So suspense account debit to Satvik capital account 11,500. Observe, suspense account debit to Satvik capital account. Write down more one, yeah, 11,500. Entry correct. Suspense account debit to Satvik capital 11,500. That's it. Is it clear, students? So this is a small correction in the answer. You try to correct it. Next one, bank reconciliation statement. This is also one of the important chapter, students. Look at bank reconciliation statement. From the following particulars of Messrs. Iqbal Enterprises, prepare a bank reconciliation statement. Okay. Bank overdraft as per passbook as on 31st 2024 was 8,800. So here we have overdraft, student. I always suggest to the student to prepare a small working note. A small working note. What is that? First, you write down here cash book and passbook. Now, in this problem, what we have? We have OD, overdraft. Don't forget, we have overdraft. Now, observe the problem. First one, okay, anyway, this is overdraft balance. So, how it is shown in the problem? So, bank overdraft as per passbook. Bank overdraft as per passbook, or the same can be called unfavorable balance as per passbook, or debit balance as per passbook. Now, we start our problem. Look at. So, what is the heading we write? Bank reconciliation statement as on 31st March 2024. Particulars amount. Overdraft as per passbook 8,800. Now, look at it. Look at one by one transaction. Checks deposited in bank for 5,800. Total we have deposited checks into bank. Who will record the transaction first? Cashier. We record that means cash book, we record the entry first. So with this amount, automatically our overdraft gets decreases. Overdraft gets decreases. Yes or no, students? Cash book overdraft gets decreases. Cash book overdraft gets decreases. But whereas only 2,000 were cleared till 31st March. How much amount is credited into bank? 2,000. So in the bank overdraft also decreased, but how much? 2,000 only. So here what is the difference you get? 3,800 rupees. So compared to cash book and passbook, our cash book overdraft gets decreases, whereas passbook overdraft gets increased by how much? 3,800. Is it clear, students? Next one. Checks issued were 2,500, 3,800, 2,000. Total how much? 2,500 plus 3,800 plus 2,000. Total 8,300 rupees worth of checks we have issued. Who will record this transaction first? Cash book. So in cash book we record this transaction. So automatically our overdraft gets increases. Yes or no, students? Yes. Look at. During the month, okay, the checks of 5,800 is still with the supplier. Means total we have issued 8,300, but out of them only 5,800 checks are still with the supplier. That means only 2,500 worth checks are cleared. So what is the difference here? We have 5,800 rupees difference. So when you compare cash book balance with passbook, cash book overdraft increases, but whereas passbook overdraft by how much? 5,800 only. Okay, next one. Dividend collected by bank 1250. Okay, so who will record this transaction first? Passbook. So passbook overdraft gets decreases. Passbook overdraft gets decreases, na? Yes. Was wrongly entered as 1520 in cash book. The same transaction we also entered in the cash book. But how much entered? 1520. So what is the difference here? 1520 minus 1250, 270 rupees difference. So when you compare cash book and passbook, automatically cash book overdraft gets increases, whereas passbook overdraft gets. Observe, students. This transaction is recorded in both books, but in cash book they entered 1520, but in passbook they entered 1250. So The difference 270. Okay, next one. Corporation tax 1200 paid by bank as per standing instruction. First, who will record this transaction? Bank directly. So this is a payment. This is a payment so that bank overdraft gets increases. This is the payment so that bank overdraft gets increases by 1200 rupees. Appears in passbook only. That means there is no record in the cash book. So cash book overdraft decrease. Then you compare cash book and passbook. Na passbook shows 1200 more, means overdraft 1200. Next one. Interest on overdraft 930 was debited by bank in passbook. So who will record this transaction first? Bank will record this transaction first. So in the bank overdraft gets increases by how much? 930. Simple, students. Next one. And the information was received on 3rd April. But on what date we are preparing this BRS? 31st March. 31st March. Now look at. So, but in the cash book there is no entry, so that overdraft gets, because no, there is no entry, no, so that my overdraft gets decreases. Next, direct deposit by Messrs. Rajesh Trader 400 not entered in cash book. First of all, who records this entry? Passbook, so that passbook overdraft gets decrease. Why? Because it is deposit, no. With the deposit, our overdraft gets decreases. How much? 400. 400. Now, but no entry in cash book, so that cash book overdraft. Amount transferred from fixed deposit account into the current account 2000 appeared only in passbook. We have fixed deposit in the bank, that is transferred to the current account. That means our cash book, first who will record this transaction? You will tell me. Passbook. So overdraft gets decreased. But the same is not entered in cash book, so that overdraft in. That's it. This is our working note. This is our working note. Now, first observe which book you have taken as starting point, means passbook. Passbook is our starting point. Yes or no, students? Now you need which book balance? Cash book balance. You need which book balance? Cash book balance. So whatever the symbols we have assigned for cash book, you just follow those symbols. You follow these symbols, students. Decrease means minus, increase means plus. Decrease means minus, increase means plus. So look at, accordingly they did the same. So you can check the answer. Observe. So here what are the plus symbols we have assigned? Is minus symbol, is plus symbol, is also plus, is minus, is minus, is plus, is also plus. Observe, total 1, 2, 3, 4. Here a minute, what happened here? 5800, 2400, 5800. Yeah, here observe, students, one small correction. In the cash book, how much amount recorded? 15. The cash book, how much amount recorded here? 1520, na. So this is dividend collected, na. Our overdraft gets decreases. Our overdraft gets decreases. One small correction. Our overdraft gets decrease, whereas passbook overdraft gets increase. We recorded 1520, so overdraft decreased by 1520. But in the passbook, they recorded 1250, overdraft decreased by 1250. So what is the difference? 270. So here it is minus. Here it is. So 3 plus 3 amounts you add 5800 plus 400 plus 2000, remaining amounts minus. So accordingly you can check this, students, or no. So finally we get the overdraft of 1800. Is it clear, students? Next one. valuation of inventories. Next one, valuation of inventories. Here if you observe, from valuation of inventory they have given two problems. One is one is closing stock valuation by following FIFO, LIFO, weighted average, like that. Next one is adjusted selling price method. Next one, adjusted selling price method, student. So first we look at 6a. The following are the details of material inventory bought and used by manufacturing company. Generally this technique we follow when we have a proper record system, that too when inventory is ordinarily interchangeable. When inventory is ordinarily interchangeable, then we follow this method. That too we need stock records. So look at the first one. 1/10/2021 balance opening inventory. Okay. 1/10/2024 material bought, that means purchases 200 units, 60 per unit. Next one, 2nd October issued for use 100 units. Price they didn't give. We have to apply the price. 3/10/2024 material bought again. 3 4/10/2024 issues. 7/10/2024 issue. Look at the end. You are required to calculate the value of inventory material as on 7/10/2024 by applying weighted average method. Which method they are asking? Weighted average method. Which method? Weighted average method. Under weighted average method, what we do? Total value of stock. We apply the formula total value by total quantity. Total quantity. Total value by total quantity. This is the formula for value issue price. This is the formula for issue price. Yes or no, students? Yes. First we draw the format. Look at for the heading, calculation of value of inventory as on 7/1/2024 of manufacturing company. Observe normally how we draw the format. Date, and above this we draw a format like this. Okay, here we write receipts and issues and balance. Yes or no, students? But here they have written directly. Here they have written directly receipt, rate, amount. Normally here we write quantity, here also issue quantity, here also balance units quantity. So you may follow this format also, no problem at all. Now first transaction is balance. So directly we write the quantity in balance column, but here we don't have any balance. Next one, purchases. Look at how many units we have purchased. 200 units, 60 per unit, total 12,000 rupees. So purchased 200 quantity, price is 60, total 12,000. Now write down the same in the balance column. 200, 60, 12,000. Next one. Next transaction is issues. So second 10 issues. Now issues we write in issue column 100 units. You observe we have only one lot of goods. Now we are issuing out of them, so that we apply same price 6 rupees. Total 6,000. Now what are the balance goods left? Balance units left. Previously we have 200, now we issues 100. Balance left 60. Previous price 60, now also 60. So 60 total balance of goods 6,000. Next one, 3rd October material bought. We have purchased material. Look at, so this we record in receipt column. 3rd October. How many units purchased? 400. Issue price, sorry, receipt price 80. Total 32,000. Now, when you are writing balance, please check that previous how much quantity we have 100. Now purchased 400. Add total quantity 500. Add total quantity 500. Next one. Previously balance how much? 6,000. Previous balance how much? 6,000. Now purchase value how much? 32,000. Total amount 6,000 previous balance and 32,000 purchased amount. Total amount 40,000, 38,000. Total amount 38,000. Now if you want to get the price, weighted average price, then total amount. So here I am writing total amount 38,000 divided by total quantity 500. Observe, total amount 38,000 divided by total quantity 500, we get 76 rupees. We get 76 rupees. Observe students, 76 rupees. So that price we write. That price we write. Okay, 76 rupees. Now, immediately if you issue the goods, we apply 76 rupees. Yes or no? Next one. Next, 410. Issued for use 200 units. Issued for use 200 units. So we write the same in issues column. 200. Before issue, what is the price we have? 76. Now we apply the same 76. Amount 15,200. While you are writing balance, take care. 1500 earlier units. Now we issued 200. Remaining balance left 300. Earlier price same 76 rupees. Now we write 22,800. Next one. 710 also we issued 200 units. Same we write in issues column. 710. How many units issued? Before this, how much price we have? 76. So 200 into 76, 15,200. Now how many units left? Previously we have 300 minus 200, 100 units left minus into 76. So total price 7,600. Now as on 7 January 2024, we have 100 units of inventory of 7,600 value. Yes or no? This is our answer. Look at simple problem. The value of 100 units of inventory as on 7/10/2024, 7,600. That's it, students. Next one. Look at the B problem. This is adjusted selling price, student. So normally adjusted selling price problem, they give you this type of problem, or we have one another model of problem. Look at first this. From the following information, calculate the historical cost of closing inventories using adjusted selling price method. Normally, in some businesses, at the end of the year, we value the closing inventory at selling price. At selling price, because sometimes it becomes difficult to value the inventory at cost price. And this method is usable in retail industry. In retail industry. Now, normally closing stock is at what price? Selling value. Closing stock inventory is at selling value. Selling value consists of what? Profit margin. So from the selling price, if you can deduct profit, from the selling price, if you can deduct the profit, then you get cost. This is the technique behind adjusted selling price. Now the closing inventory is at selling value. Out of that we deduct profit, so that we get what? Cost. Now here the question comes, how much is profit margin? How much is profit margin? So this we need to find out. Observe carefully. Profit is equal to, that means percentage of profit is equal to profit divided by sales. Profit divided by sales into 100. Yes or no? Sales we get in the exam, that means problem, but you don't get profit. Now you need to calculate profit. Look at first one. Closing stock. Closing stock we have at selling price. We have at selling price. From selling price, if you can deduct, then you get cost price of closing stock. This is the idea behind the adjusted selling price. But here the problem comes. What about the profit margin? Now, to calculate profit margin, we have a formula, that is profit divided by sales. Profit divided by sales into 100. Yes or no, students? Now, the question comes, how much is profit? Profit we have formula sales minus COGS. Yes or no, students? Sales minus COGS. Yes, sales we get minus COGS formula, opening stock plus purchases minus closing stock. Minus closing stock. But here, if you observe, we get all the information: sales, opening stock, purchases. But here, the closing stock is at what price? Selling price. Here, the closing stock is at what price? Selling price. Now, what we do is, for the sales, we add this closing stock also. For the sales, we add this closing stock also. How, sir? Look at sales minus into minus closing stock plus closing stock, closing stock minus opening stock minus purchases. Observe, students. Generally, closing stock must be at what value? Cost value. But here closing stock we have at what value? Selling value. That's why what we are doing is we are assuming that if these goods were also sold, then what is the total sale value now? Look at sales plus closing stock. Is it clear? Minus opening stock minus purchases. This is the formula we use. We get profit by by using this formula we get profit, and this profit is substituted into percentage of profit formula. Then this percentage is applied on here. This is the logic behind adjusted selling price. Now look at the problem. Purchases during the year 10 lakhs, sales during the year 15 lakh, opening inventory nil, closing inventory at selling price 2 lakhs. Simple. Now I have explained the formula. Now just you substitute. Sales is how much? 10 lakhs. Sorry, sales how much? 15 lakh. Sales 15 lakh. Less closing inventory also we have at selling value. Closing inventory also we have at selling value 2 lakhs. Minus opening stock how much? Nil, 0. Minus purchases how much? 10 lakhs. 7 lakhs is our 7 lakhs is our profit. Yes, sir, no, students. Now this profit apply here. This profit apply into this formula. So 7 lakhs. This 7 lakhs profit we got at what sales? Not only at 15 lakhs sales. To this 15 lakh we also added 2 lakhs closing stock. That's why here you have to write 17 lakh. Okay. So how much percentage you get? 7 lakh divided by 17 lakh. You get almost 41.176%. Or round off you can take 41.18%. Now apply this onto this formula. So what is the selling value of closing stock? 2 lakhs. What is the selling value of closing stock? 2 lakhs minus, apply this formula, 41.18%. 2 lakhs minus 41.18%. So you get directly 1 lakh 17,640. This is the closing stock. This is the closing stock value. Observe, students. This is very, very logical. If you can understand the logic behind this, then you can solve this type of problem, any problem. Okay. Now look at the answer. Yes. There we followed formula approach, the same they have given as statement approach. Look at first sales. Here we have added sales 15 lakh plus closing stock. We added now total 17 minus opening stock minus purchases. So here also minus cost of goods available for sale. You get gross margin 7 lakh, and this 7 lakh is applied to calculate rate of gross margin. 7 lakh divided by 17 lakh, 41.18% approximately. Then this percentage is applied on closing stock. So cost of closing inventory is equal to 2 lakh less 41.18%. Now 1 lakh 17,640 is your closing inventory. Yes or no, students? Yes. So here we have rounded off, or you can take 41.176% is also almost you get 1 lakh 17,640 rounding figure. So that is what they have given here. Is it clear, students? It is very, very easy problem once you understand the logic. Clear, everybody? Yes. Now look at the next question. Depreciation and amortization. Next question. Depreciation and amortization, student. Depreciation and amortization. Look at, this is also very important question. Messrs. Deep Lakshmi purchased a second-hand machine on 1st April 2020. Here, when you are solving depreciation problems, first check for how many years you need to prepare this machinery account or depreciation account, whatever it may be. Here they said prepare machinery account firm for the years 20 to 24, means 2020, 21, 22, 23, 24. For 4 years you have to prepare. Okay, that means this is 1st April 2020 na, ending 21, 21, 22, 23, 24. For 4 years you have to prepare the machinery account. Yes or no? Yes. Now, at the time of preparation of machinery account, first identify the financial year. One financial year. Let us say, for example, here we have 1 4 2020, and this ends on, they said the financial year ending. Yeah, first read the problem, then we can understand. 1st April 2020 for 1,60,000. Overhauling and erection charges amounted to 40. Now, what is the total machinery cost? 2 lakhs rupees. Another machine was purchased for 80,000 on 1st October 2020. Fine. On 1st October 2022, the machine installed on 1st April 2020, that's the first machine, 2 lakhs machine, was sold for 1 lakh rupee. At the time of sale of machine, we need to calculate three things. One, sale value. Two, depreciation till sale. Three, profit or loss on sale of the asset. These three we need to calculate. Next, another machine for 30,000 was purchased and was installed on 31st December 2022. We sold on 1st October and we purchased again another machine on 31st December. Under the existing practice, the company provides depreciation at 10% per annum on original cost. Normally, they are charging depreciation on original cost. However, from 1st April 2023, it decided to adopt WDV method. Means earlier they prepared, followed original cost method. Now they are following WDV method. Now they are following WDV method. That means it is change in the method of depreciation. Change in the method of depreciation. When the method of depreciation has been changed, then there are two possibilities. One, the change may be taken from the retrospective effect, means from the date of purchase of asset, or simply we can change the method from the year itself. That means without any retrospective. Here they said on what date we have changed the method from 1st April 2023. That means till 31st March 2023, they followed original cost method or straight line method, and to charge depreciation at 15% per annum. Earlier, what is the rate of depreciation? 10%. Now, what is the rate of depreciation? 15%. You are required to prepare machinery account for the years 20 to 24. Means here they didn't say on what date we are closing the books of accounts. But they have given a hint. What is that hint? What is that hint? 1st April. What is that hint? From 1st April 2023 onwards, they have changed the method of depreciation. This is the hint we have in the problem to identify the financial year. Now, you people tell me what is the financial year they are following? 1st April to 31st March. Here, total how many financial years you have? Total how many financial year you have? 1 4 2020 to 31 3 2021. Next, 21 22, 22 23, 23 24. Out of that, from 23 24 onwards, they have changed method of depreciation. That means for the 3 years they followed original cost. And when you are writing entries, write chronologically. Now first look at one financial year, 1 4 2020 to 31 3 2021. In this financial year, what happened you identify. During this financial year, what happened you identify. What happened during this financial year? 1 4 2020 we purchased asset, and during this year no more transactions, so directly calculate depreciation on 31st March 2021. Yes or no, students? Yes. Now come to second year. What happened in 2021-22? Observe carefully. We sold asset on 1st October 2022. That means nothing happened in 21-22. Nothing happened in 21-22. Observe carefully. Yeah. 21-22 means 1st April 21 to 31st March 22. So directly you can calculate depreciation on 31st March 2022. Now come to 22-23 financial year. 22-23 financial year. What happened? You divide the problem like this. 22-23 financial year, what happened? On 1st October 2022, we sold one asset. We sold one asset. Next, on 31st December 2022, we purchased another asset. These are the transactions happened. Now, on 31st March 2023, calculate depreciation. Like this, you analyze the transactions into year wise. That's why I said first identify for how many years this asset account must be prepared. Is it clear, students? I hope you understood this concept. Now look at. Now here total how many machines you have. Here total how many machines you have. If you observe, we have three machines, na? Yeah. So I forgot to discuss this. 1st October 2020. 1st October 2020, we have purchased another machine. 1st October 2020 means in the same financial year. The first financial year itself, we have purchased two assets. Sorry, I forgot this. Next one. So total how many machines we have? Machine 1, machine 2, machine 3. So when you have these many machines, it is always suggestible to prepare one working note for calculation of depreciation. Yes or no, students? So here our planning for solving this problem is machinery account and working note to calculate depreciation. At the same time, on the at the date of sale of asset, we also calculate profit or loss. Is it clear, students? Now look at the next one. So observe this now. Yes, machinery account in the books of Messrs. Deep Lakshmi. Machinery account in the books of Messrs. Deep Lakshmi. First, here observe the financial years 1 4 20 21 21 22. Next, 1 4 23 24 22 23 to 23. One more financial year. So total four financial years. Look at one by one. This is a little bit lengthy problem, student. This is little bit lengthy problem. Observe carefully. Transaction wise. First we have purchased asset. First we have purchased asset. So for that, what is the entry we record? Machinery account debit to bank 1 lakh 60. After that, we have paid some overhauling expenses or something, repairs, something. So to bank account again. So total asset value how much? 40,000. In the same financial year, we have purchased another asset on 1st October. So to bank 80,000. So total we have two machines now. At the end of the year, we have to calculate depreciation on two machines. For that, we have working note. Observe carefully. We have working note here. Yeah, under straight line method. Machine 1, machine 2, machine 3. First cost, machine 1, machine 2. Next depreciation for 2021. Machine 1 we have purchased on 1st April, so that we calculate for full year. Full year. Machine 1 full year. How much? 2 lakhs into 10%, 20,000. But second machine we purchased on 1st October. So from 1st October to 31st March, 6 months. So on second machine we calculate depreciation for 6 months. So 10% into 6 by 12, 4,000. So for the first year, what is the total depreciation? 24,000. So credit depreciation 20,000 plus 4,000, total 24,000. Is it clear? Now balance. Debit side 2 lakhs plus 80,000, 2 lakh 80,000 minus 24,000. Balance is 2 lakh 50,000. Balance 2 lakh 50,000. Is it clear, students? Now the same is carried forward to the next financial year, that is 1 4 2021 to balance 2 lakh 56. Now if you observe 2021-22, no transaction happened. No transaction happened. Now directly we go to the year end 31st March 2022. Depreciation. First asset value is how much? 2 lakhs. 2 lakhs into 10%, 20,000. Second value of asset 80,000. 80,000 into 10%, 8,000. So second year depreciation 28,000. 2 lakh 56 minus 28,000. Balance 2 lakh 28,000. Yes or no, students? Yes. Next one. Now this balance is carried forward. This balance is carried forward. Okay, so 1 4 2021, 2 balance BYD 2,28,000. Here. Now, 22-23, what happened? 22-23 financial year, we have sold one asset and we have purchased another asset. First, we see the asset which we have sold. So, I said three things we have to do at the time of sale of asset. First one, sale value. So, what is the sale value of asset? 1 lakh. 1 lakh. What is the entry we record? Bank account debit to machinery account. So, machinery account credit 1 lakh. Now, till the date of sale, when we have opened the books of accounts, 1st April, till the date of sale, what is the date of sale? 1st October, 6 months. So, we have to calculate depreciation. So, 2 lakhs into 10% into here, 2 lakhs into 10% into 6 by 12, 10,000 rupees. Now, calculate profit or loss. Observe students, what is the book value of asset now? Here we have calculation problem. Yes. This is the original cost of machine till date. Till date, how much depreciation provided? 20,000 first year, 20,000 second year, 10,000 for the third year. Total 50,000 depreciation provided. 2 lakhs minus 50,000. The WDV or book value of the asset is 1,50,000. Book value of the asset is 1,50,000, but it is sold for 1 lakh, so 50,000 loss. For the loss, what is the entry we record? Profit and loss account debit to asset account. Yes or no? So, observe carefully. Asset account credit side. Asset account credit side. By profit and loss account. Loss on sale of asset. Over. This is very important aspect. This is very important aspect. Next one. On 31st December, we have purchased one asset now. On 31st December, we have purchased one asset. For that, what is the entry we record? Machinery account debit to bank account. Machinery account debit to bank account 30,000 rupees. Machinery account debit to bank account 30,000. Now 22-23 financial year completed. 22-23 financial year completed. Now we calculate depreciation. We have second asset and also now we have third asset. So second asset value how much? 80,000. 80,000 into 10%. Third year we have for full year. So 8,000 rupees depreciation we calculate. Now come to third asset. Third asset value is how much? 30,000. And this is purchased on 1st December, 31st December. So we calculate depreciation for 3 months into 10%. How much we get? 30,000 into 10% into 3 by 12. Total 750. 750. Is it clear, students? Yes. Next one. Next one. So this year completed. So total depreciation for year 3. Total depreciation for year 3, 10,000, 8,000, 750. Total 18,750. Observe carefully. 18,750. Now balance the account. You get 89,250. Okay. Now this is carried forward to the 1/4/2023 last year. Last year. Is it clear, students? Yes. Now 23-24 financial year, what happened? There is no transaction because no purchase of asset, no sale of asset. But from 1/4/2023, we have changed our method of depreciation. From 1/4/2023, we have changed our method of depreciation. Yes or no? Yes. Now, now, now identify on 1/4/2023 what are the book value of asset. What are the book value of asset or WDV of the asset? Yes. We have two machines. So, second machine WDV 60,000, third machine WDV 29,250. Now, for the fourth year, we calculate depreciation on 60,000 and 29,250. On 60,000, 15%, on 29,000, 15%. So, how much we get? 60,000 into 15%, 9,000. 29,250 into 15%, 4,387.5. Total depreciation for fourth year 13,387 point is the total depreciation for year 4. Get students? Total depreciation for year 4, 13,387.5. Now 89, balance this account, 89,250 minus 13,387.5, balance you get 28,78,860. This is our depreciation problem, student. This is our depreciation problem. Is it clear? So this RTP January 2025 is going to be in two parts, students, due to time constraint. So I am uploading this video now, and within few hours or within next day I will upload part 2 also. Hope you understood. Thank you, students.